Hello everyone, I share with you the important statements of the Fed President. Don't forget to like the video and subscribe. Fed's Powell, the labor market is extremely tight, inflation is very high. It is very important that we reduce inflation. We are working quickly to reduce inflation. The FOMC has the tools to restore price stability. We continue the process of reducing our balance sheet significantly. Fed's Powell, the overall labor market shows aggregate demand remains solid. Salaries are increasing. Job growth is slower but still solid. Labor demand is strong, but supply remains under pressure. Inflation is well above target. Although prices of some commodities fell, the previous increase and inflation increased the pressure. We are looking for convincing evidence that inflation will fall in the next few months. The rate of rate increases will depend on the data. An unusually large raise may be more appropriate at the next meeting. Fed's Powell, at some point it may be appropriate to slow the gains. More surprises await us. We will convey ideas as clearly as possible. It probably makes sense to slow the rate of increase as interest rates become more restrictive. I wouldn't hesitate to make a bigger move if needed. Considering the statistics, 75 bps was the right decision. There was tremendous support for this increase at this meeting. Inflation continued to disappoint. We're right in the middle of what we think is neutral. We worked quickly to reach neutral. Our focus will continue to be on better balancing supply and demand. We observe a slowdown in economic activity. We believe core inflation is better data. Fed's Powell, these recent increases have been large and come fast, so their full impact has yet to be felt. We will question whether the policy is tight enough to bring inflation back to the target. It is difficult to predict with certainty the state of the economy in the next 6 to 12 months. The Fed will offer less openness in interest rate changes. Our thinking is that we want to reach the moderately restrictive level of interest by the end of this year. This means 3% to 3.5%. The latest inflation report was worse than expected. We will have more inflation data until September. Fed's Powell, FOMC sees rate hikes in 2023. Growth needs to slow down. In normal times we can look at volatile commodity prices. Now we can't just look at commodity prices. We think we need a period of below potential growth to create some recession, and that will allow the supply side to catch up. In any case, we will need softening of labor market conditions. We cannot maintain a vibrant labor market unless we reduce inflation. We don't think we should have a recession. The path to a soft landing has clearly narrowed and may narrow further. Fed's Powell, I don't think the US is in recession right now. Too many sectors of the economy are doing well. Job growth, salary measures are strong, they are not in line with the recession. Fed's Powell, I will skeptical of the first gross domestic product, GDP, reports. We are currently neutral and at some point it will be appropriate to slow rate hikes. We have not decided when to slow rate increases. We will monitor the data for September and decide accordingly. We can do another unusually large rate increase, but it will be with data. We still think that the best measure of inflation is personal consumption expenditures. Fed's Powell, we will monitor both the Consumer Price Index, CPI, and personal consumption expenditure data, but we think that personal consumption expenditure data is the best indicator of inflation. I see a slowdown in housing and investment demand in the second quarter, but we're not sure by how much. We would like to see demand below potential for a while. Job creation is a little slower than in the past. Friday's employment cost index will be a key indicator. Fed's Powell, we think the labor market may adjust with lower than expected increases in unemployment due to excessive demand. Stagnant workforce participation may be related to COVID. The slowdown in the second quarter is remarkable. No one can be sure if we can make a soft landing. Fed's Powell, balance sheet contraction continues well, we will continue at a faster pace in September, we believe the market can absorb it. It may take 2 to 2.5 years for the balance sheet to break even. There is no reason to think that this is not a sensible speed. Markets rely on the Fed's commitment to bringing inflation back to 2%. We will raise the policy rate to a level where we are confident that inflation will reach 2%. Fed's Powell, I don't think we're going to have to do the same forward steering as we did in September 2020. We need to see that demand slows down and inflationary pressures decrease. I'm not sure there would be a huge difference even if we started raising rates 3 months earlier. Fed's Powell, the Fed does not make a decision on whether the USA is in recession or not. A recession is defined as a broad-based decline and we are not in such a situation at the moment. Fed's Powell, we realized that achieving the soft landing goal was very challenging. It has become more challenging in recent months. From a financial stability perspective, we have a well-capitalized banking system. We see real decreases in food consumption. This was the statement of Fed Chairman Powell after the press conference. Thanks for watching. Don't forget to subscribe to the channel.